Hey everyone, John and Ray here, slingshotfutures.com. Today, we're going to be taking a look at the RSI indicator. Now, the RSI indicator is, it's a momentum indicator, very similar to like the stochastic as an example, but it has a different function. The stochastic is more about divergences and that kind of stuff. The relative strength index, or the RSI, is a momentum indicator that measures the magnitude of a recent price change to analyze whether or not it's overbought or oversold. So really, that's kind of the primary use of RSI, which means that by itself, it can sometimes be a great indicator, but generally, as with all other indicators, it's more of a combination type of indicator. Now, breaking down the formula of the RSI, RSI equals 100 minus 100 divided by 1 plus RS. Now, let me type that out for you. So RSI equals 100 minus 100 divided by 1 plus RS. So, what is, first of all, RS? So RS, basically, that is the average gain of an up period during the specific time frame versus the average loss of a down during the down periods during the specific time frame. So an RSI of 14, as an example, would be the last 14 periods. That's the average up divided by the average down, right? That's kind of the difference. Now, really the traditional use of RSI is for, again, those overbought and oversold conditions. So now that we know how the calculation works, it is really derived off of going too far up, too far down, etc. We can use that to find areas of interest. Now, in RSI, my preference is to use it during a trending environment. That's probably one of the best, because if you're trending up, you're looking for a pullback, that's when you want to see the RSI go oversold. If you're in a range, you want to look to fade the highs, right? So here is the trending scenario, right? When you're moving up, you want to see the oversold mechanic in this case, because it's moving up and pulling back. So on a move up, you want to see the RSI do something like this, where it dips way below the low bracket, which is at 30, for an oversold condition to rally back up again, right? So that's where you want to see that, on those dips. The other side of things is when the market is in a range, just doing its thing in a range, you want to find oversold and overbought conditions in the indicator when the market is above or below the average range, right? So below the average range, looking for the indicator to make a dip below that same area. So that's kind of the idea behind the RSI. Now, if we look at actual, situations that occurring, crude oil did have a slight trend working in its favor, but for the most part, it really wasn't that good of a trend. It was kind of choppy, sloppy, but when we started pushing up towards these previous swing highs and contesting these swing highs, right? So we're in a nice downtrend, working our way down, we make a new low of day, and it keeps going. That's showing that the sellers are in control and trying to push. So what are we looking for? Well, we're looking for an overbought condition, meaning that it's gone too far up, and we're expecting it to reverse. And what better place than at a swing high trap and a downtrend, right? Right there. It just poked its head into the overbought territory and started turning back down. Now, by itself, knowing that, okay, well, we went overbought, maybe an area to sell. But let's add to that more stuff, right? We need more than just one thing telling us to get into a trade, as with most indicators or most anything else. What else do we have here? Well, if we measure from the high to low, first of all, let me catalog and get this on the chart so we don't forget it. That is the swing trap area, right? So we have a swing trap firing off. Perfect. Check mark number one, right? Now we look at another side of things. What Fibonacci ratio is this, right? If we look at our standard fibs, and let's load up our standard fib templates here, standard Fibonacci, we are at a 618 reversal point. So we have a 618 reversal point on Fibonacci. We have a swing high trap. We have an overbought condition on the RSI. Looking pretty good, right? Everything is pointing to the market wanting to take a tumble. Now, couple that with a candle pattern, right? Let's make it even better. Let's get some juiciness in this steak here. We have a pop-up and an immediate close right back down. That, my friends, is what we call a twin reversal. It closed above, immediately closed right back down again, showing signs of failure. You've got pretty much every check mark in the book telling you to go one direction, and that direction is down. So that's what I mean by combining these things with other levels of interest. And that was a beautiful example of a potential short play. Now, looking at a slightly stronger trending environment, sometimes you'll see a trend that's so strong that it won't pull back more than, the 50% level, which you can see kind of in the middle here. And sometimes those 50% pullbacks in a really strong trend can be just as good as if it were to dip underneath the lows, right? So the high bracket is at 70, that above 70 is considered overbought, below 30 is considered oversold. But sometimes when a trend is so strong, a dip back to 50 is all it's going to take. And here we have a very strong trend to the upside. We're looking for those 50 dips, right? So if we put a line on this 50 mark here, that was pretty close. Let's try that again. 50. That is our 50. That's our 50 point, right? That's the halfway back area on the RSI. So what are we looking for? Well, we're looking for a dip to pull back to at least 50% while maintaining a bullish trend. So here we have a trend line coming up, and guess what? We have a 50 test right there. It is a physical test, meaning that it actually tested 50 or lower. And what do we have? We have rising support at the channel low. We also have about a 618% pullback on the Fibonacci ratio right inside there. Everything lining up for the exact same thing for a beautiful continuation push to the upside. So a great use of the RSI and a modified use in the event that the trend is just sometimes too strong. You have to look for those 50s instead. But overall, the RSI is a great indicator, especially when you're coupling with other things. It's a phenomenal confirmation tool to use in your trading as a potential something to add to your tool belt. So hopefully you found that interesting. As always, underneath the video, click on subscribe, click on the notification bell icon to the right of that so you're notified every time one of these videos comes out. Along with that, if you have any questions about everything that we talked about or anything in general, feel free to shoot me an email, jbrink@slingshotfutures.com. Aside from that, hopefully you had a great trading day today. Hopefully you have a great trading day tomorrow, and we'll see you all in the next video.